Class 11 Business Studies. In this video, we are going to deal about direct taxes. So, what is tax? Tax is an amount of money that you have to pay to the government so that it can pay for public services such as roads and schools and hospitals. In India, there are two types of taxes, direct tax and indirect tax. What are direct taxes? A direct tax can be defined as a tax that is paid directly by an individual or organization to the government. A direct tax cannot be shifted to another individual or entity. The individual or organization upon which the tax is levied is responsible for the fulfillment of the tax payment. Direct taxes are paid straight or directly to the government, such as income tax, poll tax, land tax, gift tax, and personal property tax. What is equitability? A direct tax is an equitable tax. A direct tax is equitable in the sense that it is levied according to the taxable capacity of the people. Equitability recognizes that each person has different circumstances and allocates the exact resources and opportunities needed to reach an equal outcome. When was tax introduced? In 1860. The tax was introduced for the first time by the James Wilson, India's first union budget, introduced by the pre-independence finance minister. James Wilson on 7th April 1860. So, James Wilson, the then finance minister of India, introduced the income tax. During the pre-independence period, especially after the Indian Sepoy Mutiny of 1857, the economic condition of India was very poor. The Income Tax Act of 1860 was enforced to meet the losses sustained by the government on account of the military mutiny of 1857. Income was divided into 4 schedules and taxed separately. Income from landed property, income from professions and trades, income from securities, and income from salaries and pensions. Introduction of Income Tax Act. Separate Income Tax Act was passed in the year 1886. This act remained in force up to 1918. The Indian Income Tax Act of 1918 repealed the Indian Income Tax Act of 1886 and introduced several important changes. Again, it was replaced by another act in 1922. The organizational history of the Income Tax Department starts in the year 1922. The Income Tax Department was started in the year 1922. Become very complicated on account of now this act of 1922 has become very complicated on account of innumerable amendments. The government of India therefore referred to the Law Commission in 1956 with a view to simplify and prevent the evasion of tax. 1961. In 1961, consultations with the consultation with the Military of Law, finally the Income Tax Act 1961 was passed. The Income Tax Act of 1961 has been brought into force on 1st April 1962. It applies to the whole of India, including Jammu and Kashmir. Since 1962, several amendments of far-reaching nature have been made in the Income Tax Act by the Union Budget every year, which also contains Finance Bill. After it was passed by both the houses of the Parliament and receives the assent of the President of India, it becomes the Finance Act. At present, there are 5 heads of income. Income from salary, income from house property, income from profits and gains of business or profession, income from capital gains, income from other sources. There are 23 chapters and 298 sections and 14 schedules in the Income Tax Act. So now basically we follow the Indian Income Tax Act of 1962 as amended from time to time and as passed in the Parliament as a Finance Act every year. Thank you. For detailed notes and question and answers, log on to eduguru-notes.blogspot.com. Thank you.